Hello and welcome to the Weekend Investing Daily Bite of 11th October. And today we had a sort of a nothing sort of a day. No major moves either way. Yes, we did give up morning gain, but I mean, there was nothing really exceptional about today. So it was just a day to pass and, maybe the market to consolidate further before deciding whether to go up or down. There is a sort of a confusion in the market whether this recent fall is finally over or are we just of that sharp fall and we are likely to witness another continuation of that downtrend, or are we consolidating here and there is going to be an counter uptrend from here on. So that point of confusion still exists where there is no clear cut answers. Today we are going to discuss whether large caps are making a strong comeback vis-a-vis the other segments of the market. Please do always read the disclaimers and do also subscribe to the channel if you haven't so far. That will be a great motivation to me and my team. Where is the market headed? So you can see here that after this 6 days of continuous fall that we have had some relief, but the relief rally seems to be having no legs. So every time the market starts to go up, it is slammed down. Um, the bottom here that was made 3-4 days back is extremely important because below that the right shoulder actually completes. You can see left shoulder, head, and the right shoulder can be made. And if that happens, I mean, we are going down certainly to much lower levels. Let me not use the word certain because nobody's certain, but still, the probability of coming back to election day highs will become higher, I would say. And if we sort of breach this, and we've not had a 2-day high close so far in the last so many days. So that basic requirement to even have a chance at the higher level is missing so far. So let's wait some more sessions. This is despite the fact that US is making new highs and some slowdown in FI sales have happened. Nifty Next 50 also extremely flat, 0.13%. So, again, neither here nor there kind of situation. Midcaps slightly up, 0.43%. Midcaps actually are looking much better than the rest of the market today. And small caps also, sticking to the average line here at 0.47%, slightly better than the rest of the market. Bank Nifty is where the weakness was, minus 0.7%. So Bank Nifty also similar to Nifty, left shoulder, head, and a right shoulder potential. And we are below the average and below where we should have been in terms of a 2-day high. So momentum trends across the market, very, very even, 230 to 250. You can't get more even than that. Halfway, no gain, and half gainers, half losers. And you also have FIIs which have slightly slowed down than before, but still selling about 5,000 crores. DII is still buying nearly 4,000 crores, and this was 10th of October. So no change of trend from there. HDFC Bank down 0.7%, ICICI and Axis down more than 1%, TCS down 2%, Mahindra, ITC, Asian Paints are also down. Trend continues to go up. Trend has been a complete outlier. It was performing very well in Nifty Next 50 and now is performing very well in the Nifty as well. So Trend has been an outlier. Reliance absolutely flat. Hindustan Levers plus 1%. And you also had Hindalco go up 2.3%. So metals still looking all right on the back of the Chinese move. You had DLF, LIC, JSW Energy, PFC, DMart, HAL, IOC, Pidilite, Adani and Sol, all these moved down. Divi Lab, Torrent Pharma, Jindal Steel, Gas Authority, Vedanta, United Spirits, Varun Beverages, Siemens, PNB move up a bit. No trend as such, but just about, uh, you know, Bank Nifty, real estate, autos down, and you had pharma and metals up. So pharma and metals still had some uptrend today. Metals are now 10% within 1 month. So metals are really pulling it away versus other sectors. Pharma is also in the green now for the 1 month gone by, along with commodities and autos. FMCG remains the poorest in the last 1 month. So FMCG and IT, the defensives remaining poor, while autos, metals going ahead is a sign that market is not looking for downward moves from this particular aspect point of view. Pharma moving up. You had several of these pharma stocks move up: Ipca Labs, Mankind, Granules, Divi's, Lupin, Aurobindo Pharma, and continuously pharma index has moved up and made new highs, and we are witnessing the same. In the stock spotlight session, you had amazing gains in two sessions from Usha Martin, going from 340 to 420. So, it took almost 3-4 months for this to come down. In just two sessions, we have launched back to the previous highs. And this stock has really done wonders from 10 rupees or even lower COVID bottom. We are now at 422 rupees. So, amazing, amazing run on Usha Martin. Strong comeback for large caps is the story. Large caps stocks are finding favor amongst escalating geopolitical tension and wobbly market. This was a story by Prashant Mukherjee for ET. The mid cap, large cap ratio chart, which had been going up uh, since 2023, has now flattened out. And if it starts to go down, it would mean that large caps are having an edge over the mid caps. If we were to see the RSI on this, um, it is showing you that maybe the steam for this ratio chart to run further is coming to close to an end. If we see a very long-term chart of mid cap to large cap ratio, you will see that over 20 years, it has made several tops and bottoms on along the way, and we are certainly nearer to a top than to a bottom on this. The RSI on this is extremely overbought, as in uh, previous such events of mid cap to Nifty being at a higher um, point to their cyclical lows. And if this were to come down, it would mean that either mid caps will go flat and large caps will continue to run, or mid caps will fall and large caps will fall lesser, or mid caps will rise and large caps will rise much, much faster. Any of those things can happen, but there is a good probability that that will happen in the coming time. So let's analyze the previous tops and bottom cycles: August 2005 to 9, August 10 to 13, and December 17 to March. These three cycles that we saw earlier. Uh, so August 2005 to April 2009. Let's look at this chart. So this is sort of the downside that we saw here, and you can see that while on the way up, mid caps after the initial hiccup did very well, in fact exceeded the large caps, but on the way down, large caps fell less than mid caps, and overall for this period, large caps were up 44% and mid caps were actually down 8%. From the second period of August 2010 to 2013, large caps were largely flat while mid caps lost 23%. And the third period where large caps lost 21%, so December 17 to March 2020 into COVID, and mid caps, of course, lost 43% in that same period. So there can be very long time periods where mid caps will underperform the large caps. It need not necessarily mean that mid caps have to crash. It may just mean that mid caps may slow down, mid caps may go sideways, mid caps may rise slower than large caps. And therefore, it is very difficult to predict, which market cap segment will perform the best at any point of time during up cycles. Whenever markets are strongly up, small and mid caps obviously will do better than large caps. And when we come down, it is likely that large caps will do better than small and mid caps. So there will always be, frenzy for one particular market segment type. So don't fall for that frenzy. Have allocations in each market segment. Maybe have some dynamic allocation if you have to from one segment to the other. But largely speaking, it is very difficult to time it to move from one to the other, and better if we spread out our allocations in a multi cap or a flexi cap kind of a situation, and of course also diversify our exposure to different asset classes, because if we see, there could be situations where large caps may be outperforming the mid caps, but both may be falling, and that can only be helped with an asset class hedge where the asset class at least is rising to that extent. So these are different ways in which you can sustain your portfolio. uh, don't just depend upon one particular segment to outperform all the time, because that is not happening. So do let me know your thoughts on this, how you have dealt with this in the last upswings and downswings, and what is your uh, recommendation to your fellow investors. See, one thing is there: when you write comments, a lot of people read that. So you're not only interacting with me or my team, We are also interacting with a lot of other folks, and there is a very healthy exchange of ideas that happens on YouTube comments. So do go ahead and write your comments there. It will be great to read them and respond to them. And thank you so much for watching these videos, and do like and share these videos, and of course please do subscribe to the channel. Thank you. Bye.